Hello, I'm Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 13th of January. It's been a testing early start to the year. There's been something of a global bond market sell-off. This is kind of emanating from the US on inflation worries and the potential for more inflationary concerns after the inauguration of the president and some of his measures later this month. The UK's particularly been caught in the crossfire because it doesn't have the luxury of economic growth which the US does, for example. And so there's been even more of a focus on UK bond markets and the sell-off there. That's resulted in a spike of yields and unusually also some weakness in sterling on prospects. That's also tipped over into some otherwise very good numbers from the UK supermarkets and retailers, Marks and Spencer Next, Tesco and indeed Sainsbury. Three of those four stocks have seen their shares fall quite sharply, despite in some cases record Christmas earnings, and that's predicated on the potential weakness of the UK economy to come rather than the results themselves. Indeed, the FTSE 250, which is the more domestically orientated barometer for the UK, has already fallen by over 3% in the first few trading days of this year. Indeed, we're only a few days into January, but for what it's worth, in the year to date, the Dow Jones has posted a gain of just 0.2%, the S&P 500 0.6%, the Nasdaq 0.9%, and the FTSE 100 1.6% up, partially because of that weakness in sterling. Looking to next week, there's probably three companies worth looking out for. We're going to have some fourth quarter numbers from Ocado. This is a stock which has been under some severe pressure. The shares have fallen by 60% over the last year, and that's mainly because of the disappointment surrounding their technology solutions business. Obviously, this is one where their robotic technology remains cutting edge, but the scale it's been able to achieve in terms of selling, particularly to overseas partners, has disappointed investors for some time now and made it into something of a jam tomorrow stock. So we'll need to be looking out for any improvement in margins and growth there. More positively, perhaps, and based on the M&S performance this week, the joint venture Ocado has with Marks and Spencer could have received something of a boost over what's increasingly looking to have been a strong Christmas period. Got a trading statement also from Currys. This has been rather more of a success story. The shares are up 84% over the last year. And again, there will be a lot of interest, not only in how Currys fared at Christmas, but also in the Black Friday and the Cyber Monday periods, which in terms of Sainsbury, Argos had a particularly strong period there. So that could easily read across to the likes of Currys. Other things to look out for is whether their interest in the sale of AI laptops has continued, and also their higher margin revenue products such as care and repair, credit provision and protection plans. Finally, Whitbread have a third quarter trading statement. Shares down about 18% over the last year. Obviously, the thing to look for here is Premier Inn and whether they saw any increase in bookings leading up to the Christmas period and whether customers were treating themselves. And the other main strand of the growth story for Whitbread is whether there's been any further progress in its Germany expansion. Thank you for watching. Have a great week.